Good afternoon, traders. It's Monday. It's 5 to 3 here in the UK. My name's Mark Owen. It's been dollar dominance. We were looking at cable to potentially bounce from 1.3 heading up towards 1.34. As I showed you what was happening in the COT report and commercial activity, we're really buying more GBP long contracts, and that's the same viewpoint that we have this week in terms of what the commercials are doing, which is extra buying of GBP long contracts and reduction of shorts. But we are still seeing a continuation of dollar dominance. 1.3 got broken, and you can see right now, if we look over to the left, we've touched the lows of 127. So there we were forecasting that bigger move to the upside, but really all that happened was support was broken. We've seen an accelerated move lower. Looking at the dollar index now on the monthly time frame, because I just had to zoom out a little bit and just see what could potentially take place. It looks like maybe 102 is going to be the next resistance level, maybe 102.20, 30, whenever price comes into connection with this descending trend line. But what we can see is that there has been no let up, no correction on the monthly on the dollar index. So this has obviously been we've seen a destruction of the Japanese yen, which is starting to pull back a little bit now as we're seeing markets slide. We're seeing that little bit of an inflow into the Japanese yen. Pound has been destroyed, euro's been destroyed. So the question does enter our heads is, how long can this actually continue? Will this continue until the next FOMC Fed meeting, where obviously the markets are pricing in a 50 basis points rise followed by a 75 basis points rise? Is this a classic case of buy the rumor, sell the news? Well, only time will tell. And you know, the more extended we get, the more, yes, keep trading the trend, but the lower the probability of success as it keeps moving away. So if we drop down to the weekly, we can see that inside that symmetrical triangle, or the squeezing pattern we were looking at, we have a broadening channel that you can see is extending right from down the lows in April 21, and this is pushing. Price has been touching this resistance trend line now for the last 3 weeks. It hits it, has a little bit of a sell-off, goes back up, and we're continuing to test and push through this area right now. Again, it's another reason why I don't want to be adding to dollar longs currently. If you're already in dollar, that makes sense to hold it and continue trading and trailing your stop according to trade management. But where we currently sit, I really don't want to be involved in buying any USD unless we get some pullback and you know we can trade it on a smaller time frame. Then so be it. But you know, like I said, whatever price remains up in this area, the probability remains low. I'd rather see a correction move back into here and another push up higher. So what would that look like if we drop down to the daily time frame? We can see now really we have seen a little correction into this area, and the price is pushed higher. Now this trend line and this formation that I can show you here, this broadening pattern, that is actually another internal pattern. I want to show you on the lower time frame, because what we're seeing is maybe this is where we get a little bit of a relief buy in the US dollar, but for a deeper correction we're going to have to break through this lower ascending trend line. So what we've got is we've got price rejecting here, and if we look at the candlestick formation that's currently formed here, we've got kind of a weak hammer, sorry, bear with me, a weak shooting star followed by an inside doji. I would like to see price break the low of this previous H4 candle to confirm that we're maybe going to have a little bit of a retracement that might come down. Whether we break, we're going to have to break this low, and if we do, we'll come down into this area, might see it touch the 100.2 area, and then price is either going to continue higher as we discussed back up into the 102.50s, or if we do break this area here, then we could see that deeper correction that we were talking about into this area before we then either get another move higher or break lower. So as it stands, I don't want to be a buyer of USD where it stands. I want to see a little bit of a correction. You know, this could happen over the next day or so. If we get some kind of rejection in this area, then I'll be looking to trade it long and move up to 102.50. And if we get a big blowout candle that takes us into 102.50. This could be seen as an exhaustive candle, so one with a really strong close, and then I'll be watching the smaller time frames through this area for a little bit of a change in cyclical pattern to get short. So that's going to be a key area to watch. Get alerts set around 102.50. And I think alerts set just underneath 101. If we can break those lows, then we might see a little bit more of a dollar correction. So let's take a look at a couple of charts that could present an opportunity if we do get continued dollar strength. So let's take a look at euro. So euro on a short time on the hourly could present an opportunity, but it's going to have to do a little bit of a retracement, which is this little zone through here around 107.75. Let's just pull in a little bit of a zone here for you to watch. So price didn't come all the way up there, and I would have highlighted that I'd look for price to test 107.70, then for a rejection to continue trading short. If we head down to the 15-minute, you'll see what's happened now is we've effectively broken a counter trend line CTL here, and we are pushing lower. Now, in order to take this trade and looking for more momentum to the downside, I would need to see these lows being broken and then a correction to highlight further downside. Sterling, on the other hand, as we discussed earlier, and in our video on maybe about 4 or 5 days ago now, and it was one that I did. It was talking about the commitment of traders report and looking for that potential next rally up in towards 134. So this was the area we were watching. We said that price could break and maybe reject this trend line, and it's just blown out all levels of support. So we have to go right out to see where the market could potentially move to. So essentially looking at the higher time frame, there's no real thought of trading this market long now until we see some sort of trend reversal on the H4. We need to see a change in cyclical pattern. So it's basically continue looking for short trades. The move lower has been aggressive, but you know we've got to wait for at least a pullback into whether we can use the 50% retracement area here, which is around 128.50. So we'll just drop down to the 4-hour time frame. We can see that we've got old structure through that area, but I can't really see a 250 pip rally coming up into the 1.3s to then sell that off right now. The 4 hours just been a straight line, and you know if you look at it on the 1 hour, it's pretty much a straight line as well. Very, very small cycles. I'd be watching maybe the 50% retracement here, 128.50, for a potential push up into that area and maybe a rejection. But as it stands, like I said, it's just sell pound, looking for opportunities to sell pound on any rallies. Euro yen, dollar yen. We'll take a look at dollar yen because it's approaching a very interesting area right now, which is around 127.60 to 127.70. Price has had a strong sell-off into this support area. We'll just go up to the higher time frame just so you can see this in a little bit more detail. Now, something to bear here is if we look at these candlestick formations, what's happening. We've had a strong move up, a strong move down, then we've had two candles that have remained within this previous Wednesday's candle. We've had Thursday and Friday that have remained within the high and low of Wednesday's candle, and then Monday is still remaining within that parameter. So in theory we've got a triple inside candle on the daily chart being formed. So a break below Wednesday's low around 127.46, we should see a move back down in towards the 126 area, and if we zoom out you'll see that's a pretty strong area to look at, and that is obviously going to weigh on the dollar index. So if we are going to get a little bit of yen strength, that will weigh on the dollar index. It equates to about 13% of the dollar index. Now if we do see price drop down here, expect that we're going to continue to see more downside on the indexes. Let's take a look at Aussie yen. Aussie yen, traditional risk off market. Now weekly chart, we were highlighting this. This is a perfect shooting star with double inside weekly candles, false break to the upside, and now we're moving to the downside. I suspect that looking at Aussie yen, we could potentially see next stop down in towards 86.08. So we've got our initial impulsive move lower. Now it's a matter of waiting for that correction to trade this next move down. So this has been one direction. We did have a sell up here that hit our targets. Hopefully some of you guys caught that move, but this last move has been very explosive. So it's sitting tight now, waiting for a correction, and then we can look to get short. I think around 93, maybe 92.50. Get alerts set in at 92.50 just to see what price is doing when it gets up into this area, and then we can make our decision based on when price gets there, should it get there. If not, then intraday traders, watch those 15-minute cycles, break and retests, continue trading with the direction of the trend. You can see that Aussie yen likes to form a base and then just breaks out. Again, we formed a base, we've broken out. You don't get too much of the market pulling back and retesting. It tends to be quite explosive. You can see here again a base formed. Let me just draw these bases in for you. Oh, a little bit wonky. Let's take that off and try and make it a little bit neater. One through here, one through here, and one through here. So it's not like you get the opportunity for the market to retest and then go again. It tends to be more breakout trades. So when you are looking at these, bear in mind the nature of each market that you're looking at and see what is a viable method or technique of trading that market. So as I mentioned, dollar is the dominant one at the minute, and therefore we are sorry if you can hear my little princess making some bellows in the background. She's only 6 months old. So to take a look at gold, if we take a look at this on the higher time frame, this is generally looking like we could see more of an onslaught for the precious metal, and this isn't running hand in hand with the traditional risk off, risk on market. This is just getting eaten up basically. Sellers are really hammering this market right now, and we can see the bond market is slightly up today, which is interesting, and 10-year treasury is down 4%. So some interesting moves on the market considering that's what we're seeing now. If we look at the monthly chart, we've got a lovely hammer here rejecting 2000. Now if we hammer, I've said it again, shooting star. If we break the low of this month, last month's candle, then I expect to see the market come down and test the previous month's low. So we can use that as an indication that the market is likely, if we break this, then we can look for corrective moves to basically sell the rally. So once we break this low, we'll look for rallies and continue trading this market down, and I think 1800 is a viable target. So if we drop down to the daily, we can see that 1900 is now a nice base has been formed. We've broken through what was 1916 to 1920. We've got through this zone today, and we've filled these wicks down here at 1900. A break below 1890, and then we can look especially for the next move lower. But any move from here, if we get rejection from here, we could potentially see a rally up into 1920, and that's going to be a great area to be looking for shorts. So if dollar continues to dominate, we should see more downside on gold. But again, be patient guys, wait for those corrections. Don't just keep buying or selling because you feel like you have to because you're a trader. On that note, I just want to say thanks for watching, thanks for subscribing, thanks for sharing and liking all our content. We've seen a nice uptick in our subscribers over the last couple of months. Maybe it's because we're putting out more content out regarding charts that are actually about to happen and areas to potentially watch for buy and sell setups. So if you have enjoyed today's content, please give us a thumbs up, share it with any fellow traders, and just so you don't miss any trades or chart ideas, make sure you subscribe. This way all videos that are published are going to come straight to your inbox as we publish them. Have a great trading week, and we will see you tomorrow. Bye bye.